It is that time yet again, ladies and gentlemen, to go over all of your Tesla stock breaking news. I will also share with you the major events for this week, including Nvidia earnings, consumer spending, PCE, and much more. And last but not least, I will also share with you my expectations for Tesla stock this week. Do I think it's going to be a good week for Tesla, or is it going to be a bad week for Tesla? Historically, following Jackson Hole, which was on Friday, we heard from Jerome Powell, that actually tends to be historically a very negative event. Like, the odds of it being a positive event are very low. But it is positive this time, and I'll explain why. And while all of this is exciting, I think perhaps we should start with your Tesla stock breaking news. Elon Musk says the rate of improvement with Grok is the fastest of any AI. Now, I'm not exactly sure how this translates into value at Tesla, or if it will, but I do think it highlights the rate of improvement that Elon's companies have with AI. Grok is seeing this kind of improvement. I imagine FSD is also going to see more improvement. Tesla Tracker on X says if you look at Tesla's 1 hour candlesticks, his next price target based on Fibonacci analysis is $300 per share before December 30th, 2024, and a retest of all-time highs around $414 per share in April of 2025, which I do think $300 per share is obtainable even before December. I think if the right market conditions are presented to us, in which they're kind of unfolding as we speak, Tesla stock could go on a run to 300 even before October 10th. And whether or not we reach all-time highs by April of 2025 depends on the path of the economy and the economic data that we get. And I have to say, I'm not as excited about the next 6 to 12 months as I am the next 1 to 3 months. I think the next 1 to 3 months are going to be pretty good. I don't know about the next 6 to 12 months. In the next video, I will share with you some of my perspective of what's going on in real time in the economy, what I'm seeing, what I'm hearing, and I think that analysis is very valuable. That video comes out at 8 p.m. Eastern Standard Time tonight, and trust me, you do not want to miss it. I also share in that video how I'm going to be investing my money now and during what could be a weakening economy, and ultimately how to best prepare for this now to maximize that opportunity when it is presented to you. Because let's face it, you can have all the knowledge you want on a specific topic. You can be as educated as you want to, but if you are not monetarily prepared to seize the opportunity, it's not going to matter. But with that said, I just want to clarify, I think either way the economy goes, as long as we are not going into some kind of depression or deep recession, which I do think is a very low likelihood, Tesla stock's going to reach all-time highs next year, in my personal opinion. But is it in the beginning of the year, or is it in the back half of the year? I actually think Tesla stock, I could see a path to $600 to $800 per share by next year, or at least by the end of next year. Trump said yesterday that Elon Musk will cut the fat from the US government, and he is looking at giving Elon some kind of advisory role. And clearly, while the election is not set in stone, we don't know who is going to win, there is a clear benefit from that guy being friends with Elon over the other party. And if you don't think so, then you clearly have not been paying attention. And that's fine. That's why you want to subscribe to the channel, so you can stay more informed. It is being reported about 2 hours ago that Tesla Vision Park Assist has launched for the Cybertruck. Quote, Tesla Vision Park Assist now displays a high-fidelity 3D representation of the world around your vehicle, including the proximity and the shape of nearby objects, barriers, vehicles, and painted road markings. And this just paves the way for FSD to launch for the Cybertruck at some point in September. Tesla has also officially launched its new referral program. Here's how it works. Referrers earn $500 towards supercharging software upgrades, merchandise, service payments, or a new vehicle for each person you refer who takes delivery, limited to 10 awards. You will also have a chance to win an invitation to an upcoming Tesla event. The first 10 people who order a new Tesla using your referral link will receive $1,000 off the purchase price. Buyers will receive $1,000 off the vehicle purchase price when using a referral link. And loyalty: purchase another Tesla product and receive $1,000 off the purchase price. You can also use the 10 referrals when you get them to take $5,000 off a new Tesla. That is a 13% discount off a brand new Model 3 rear-wheel drive for just referring 10 people. Sawyer Merritt shares some of his analytics data, which I think is very fascinating, especially the demographic in which that follows what Sawyer Merritt posts. 46.1% are based in the US, 5.1% in the United Kingdom, Canada is at 4.3%, Japan at 3.2%, India at 3%, and other is at 38.3%. This community is literally global. Like, honestly, I'm shocked only 46.1% of the traffic that Sawyer Merritt receives is from the United States. That's pretty wild. This did spark my curiosity, and for this channel, for the lifetime of this channel, 68.4% of the viewers are in the United States, 8.2% in Canada, and 4.2% in the United Kingdom, Australia at 2%, Singapore at 1.5%, and Germany at 1.2%. Oh, you also have Sweden here at about 1%, Denmark at 0.7%, and New Zealand at 0.6%. And if you were curious what the top cities are of you guys that view these videos, Los Angeles is number 1, New York is number 2, Los Angeles is 2.9% of views, New York is 2.5%, Singapore itself is 1.4%, Toronto, Canada is 1.2%, Chicago, Illinois is 1%, San Jose, California is almost 1%, London, UK is 0.8%, Houston, Texas 0.8%, and Las Vegas, Nevada at 0.8%. And the most popular age group of you guys that watch these videos is between 45 and 54 years old at 23.4% of viewership, 35 to 44 years old is 20.2%, and 55 to 64 is 21.7%. In fact, 65 years old or older is at 20.3%. So there's kind of a very wide range of viewership, which I think that's pretty interesting as well. Also, 8.5% of you guys are female and 91.5% of you guys are male. 49.3% of you guys are subscribed and 50.7% of you guys are not subscribed over the past 28 days. Go ahead and subscribe to the channel if you have not done so yet. Hopefully we help you make more money, at least gain a greater perspective of what's going on in markets. And from time to time, I'm not afraid to go against the grain and tell Wall Street they're wrong. Just like this 10% correction prediction I made on July 9th, which came to fruition just a couple of days later. And trust me, I'm not always correct, but I'm not afraid to put my opinions out there. And that's exactly what I do tonight at 8 p.m. Eastern Standard Time. Tesla's short interest of free float sits at 3.12%. You have $18.28 billion currently sold short in Tesla stock, totaling 86.77 million shares. And as I explained in one of the last videos, I do think it's possible, if not probable here, that you do see a good chunk of shorts start to cover on short positions heading into October 10th. I don't think in this market environment, with the perception that Wall Street has around a soft landing, the Fed cutting rates, the consumer potentially recovering here, is a favorable backdrop to be short on Tesla, especially heading into October 10th. Like, personally, if I was short in Tesla, I would be covering that short position. And we have seen a lot of short covering activities as Tesla stock has fallen in price. So Tesla stock was a much heavier shorted company when it was $270 per share. Shorts have been covering as the stock has went lower. That's not what you see normally if people are bearish on a company. If Wall Street's bearish on a company, shorts just short more as the stock falls. That's not what's happening. Shorts are covering as the stock falls. And I think they're probably going to cover on the way up as well. On Friday, you had 6 different trades that picked up on the option scanner, the interesting flow sentiment over on Ortex. These 6 trades totaled $1.9 million with a positive order value of 57%. Over on StockTwits, a good barometer for retail investor sentiment, you're sitting at neutral at 45. Yesterday, you were bearish at 43. Message volume is low at 31. Yesterday, it was low at 42. Doesn't surprise me. It's the end of summer. It's the weekend. You tend to see lower activity overall during August specifically. Participation ratio is high at 55. CNN's Fear and Greed Index sits at neutral at 53, getting closer to going into greed. Market momentum, extreme greed. Stock price strength is fear. Stock price breadth, extreme greed. Put and call options is greed. Market volatility is neutral. Safe haven demand is neutral. And junk bond demand is extreme fear. The percent of stocks currently trading above their 50-day moving average had a great day on Friday, really, as big tech did not do much of anything, and the equal weight S&P did well, small caps did really well. It was just a broadening out of our markets, and you see this reflected in the percent of stocks trading above their 50-day moving average. That was up almost 10%. So 10% of all stocks broke above their 50-day moving average on Friday. That's impressive. 67.07% of stocks are now trading above their 50-day moving average. And although that was impressive, you got to give it to Friday. That was huge. You're still sitting at a pretty muted level overall. I would call it a neutral level, and there's still a lot of room for markets to expand further from here. And one of the next big catalysts we have for broader markets is going to be Nvidia earnings coming out this upcoming Wednesday. Now, I've been wrong on Nvidia earnings in the past. Eventually, I will be correct. I've been wrong in the sense of this CapEx cycle, this GPU cycle. I've thought that companies were pretty built out for GPUs, that there's not this frenzy to continue to get GPUs, and the pricing for GPUs would likely fall. The H100s, H200s that are very popular today are selling for 5 times the MSRP. They normally should go for like $7,000 a piece. They're going for $30,000 plus a piece. That's not normal. That's not where the equilibrium of supply and demand will end up being. Now, I've been a little early on this. There's still a lot of demand for GPUs. Pricing has held up very well. Eventually, it will start to fall. Eventually, CapEx budgets will fall. And Nvidia will report not impressive earnings. That has not happened so far. Based on AMD, TSMC, all of your other adjacent companies to Nvidia, we have no indication that Nvidia earnings are going to be bad. If anything, we have a pretty strong indication Nvidia earnings are going to be really good. So I'm expecting really good earnings again this Wednesday for Nvidia, and I think it's going to be enough to send markets even higher and create more AI euphoria. Even if Nvidia did sell off after earnings, which is not uncommon for Nvidia, especially since Nvidia has rallied so hard recently heading into those earnings, then I think it would likely just be another catalyst to broaden out the markets. We also have other earnings Tuesday in after hours. You have Centennial One, PVH. I believe they own like Gucci and Louis Vuitton, luxury brands. You have Box as well as Nordstrom. Wednesday pre-market, Abercrombie & Fitch, Chewy, Kohl's, Foot Locker, Bath & Body Works, RBC, and JM Smucker. Again, Wednesday and after hours, your big earnings. Nvidia. You also have CrowdStrike, Salesforce, Affirm, Okta, Pure Storage, Viva, Five Below, HP, and NetApp. Thursday pre-market, Best Buy, Dollar General, American Eagle Outfitters, Ollie's, Campbell's, Burlington, Birkenstock, and 1800 Flowers. Thursday and after hours, you have Dell, Lululemon, Ulta Beauty, Marvell, Gap, Autodesk, and MongoDB. So as far as earnings being a catalyst for our markets, I think it's going to be a positive one. I'm not worried about this week's earnings lineup negatively affecting markets. And in fact, Jackson Hole is going to be a pretty positive catalyst for our markets. But in fact, Jackson Hole historically has been a very negative catalyst. The average performance during the Jackson Hole speech is negative 1.4%. The average move the day after is negative 1.3%. And on average, you're actually down 0.8% until the next Fed meeting, which is September 18th. So normally you don't get a positive reaction from Jackson Hole. You've only seen a positive reaction from Jackson Hole twice. That was 1995 and 2007. Leave out 2008, 2009, the recession that we had. What was actually going on August of these years was the markets were expecting a soft landing. Okay, 1995, 2007, we were expecting a soft landing. We got the Jackson Hole speech that was basically a victory speech on inflation, a victory speech on, bringing the federal funds rate lower in the coming months. So markets did well. Where are we at now? Well, consensus is widely that we're going to have a soft landing and the Fed's about to start bringing down rates. It was essentially a victory speech that we got from Fed Jerome Powell on Friday. I mean, in 1995, over the next 4 months, markets rallied almost 20%. Now, 2007, it was a little different, right? Because this took place in August. You had Lehman Brothers that went bankrupt in mid-September, and well, that just turned everything bad from that point. So from this perspective, as long as the economy does not start falling apart here over the next 1 to 3 months, then markets are going to rally higher off of Jackson Hole. It's going to be a very positive catalyst. And right now, at least in the short term, again, we'll talk about what the next, couple of months could actually look like in the next video. So stay tuned to the channel for that one. But really here in the near term, let's say this week for Tesla, the next couple of weeks for Tesla, I am very bullish. I think Jackson Hole overall is going to be very bullish. And I think small caps, interest rate sensitive names, I think value, I think cyclicals, dividend stocks are going to perform very well. And I think they're really going to outpace big tech, and big tech may actually see more selling pressure like we seen on Friday. Meta was down almost 1%. Google was up about 1%. Microsoft was up 0.3%. Like, these stocks did okay, but they did not do nearly as well as small caps. The Russell was up over 3%. The equal weight S&P hit a new all-time high, up 1.3%, including after hours up almost 1.4% for the equal weight S&P. And I do think Tesla will continue to outpace and likely go through a much larger rally. Now, this week, I could see Tesla stock breaking to potentially the 240s. I think you could see a very good week for Tesla. Now, we do have some economic data we'll look at in just a second, but 9-10% upside this week would not surprise me. In fact, that might be a little on the low side. As far as economic data, we do have durable goods orders, which, as I mentioned previously, came in at negative 6.6% last month. You're expecting a positive 4% number. I mean, that would still be negative over the last 2 months. So you really want to see a higher than negative 6.6% number, like a positive 6.6 or greater to actually be net positive. So that's going to be a big data set coming out at 8:30 in the morning. Dallas Fed Manufacturing Index comes out at 9:30 in the morning Monday as well. So tomorrow, S&P Case-Shiller home price month over month and year over year comes out at 9 o'clock in the morning. Richmond Fed Manufacturing Index, Richmond Fed Manufacturing Shipments, Richmond Fed Services Revenues, Dallas Fed Services Index, and Dallas Fed Services Revenues Index also comes out around 10 o'clock in the morning on Tuesday. Wednesday, you're just going to get Fed Bostic at 6 p.m. Wednesday is really the slow day as far as economic data for this week. You do have the second estimate for GDP quarter over quarter expected at 2.8%. As long as that doesn't come in, with a big downward revision, I think markets really are not going to care too much. Initial jobless claims comes out at 8:30 in the morning on Thursday, expecting 234,000. Last week was 232,000. So really just stabilization around these levels is what we're expecting for initial jobless claims. If that does spike up, that would obviously be a problem. You have pending home sales month over month and year over year also coming out at 10 o'clock in the morning. And I do think real estate could be a hidden area of stimulus, if you will. Most people's net worth is in their homes. You haven't seen a lot of homes sold over the past couple of years. So if people are able to sell their homes, they're going to wake up and have $200,000, $100,000, $50,000 in the bank, and they're going to go out and spend. And I think that could be an upside surprise to economic activity if home sales do start to pick up. Supply is now at the highest level you have seen in well over 10, 15 years. So that burden is taken off people. There's definitely the ability to sell your home and buy a new home just based on a supply dynamic. But again, are rates affordable at 6.5%? No, not really. Core PC price month over month also going to be coming out, expecting 0.2%, unchanged from last month. Personal income month over month expected at 0.2%, unchanged from last month. You want to see this come in a little bit higher. That would definitely be seen as positive from the market's perspective. Personal spending month over month expected at 0.5%. Last month was 0.3%. I don't think personal spending is going to beat here. I think it could come in a little on the low side, and I think this could be the first piece of data next week that could be a little bit disappointing. So I think Friday is definitely a day to watch, specifically personal spending. So let me know what you think about all of this information down below in the comments section. I think it's going to be a great week for Tesla. Could you see some selling? Yes, but I think there's more reasons to be bullish in the near term than to be bearish. And markets tend to follow the path of least resistance, which I do think right now, at least for Tesla, for interest rate sensitive, for small caps, for value, for dividends, cyclicals, is to the upside. So let me know what you think about all of this information down below in the comments section. Hit the like button and subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.